Good afternoon. So we have an amazing panel here, and we're going to talk about why carbon is such an important life force for the planet, not just in terms of the market or in terms of the certification or in terms of the science, but more importantly, what potential does it hold for the planet in terms of healing the planet. So we have an amazing panel here today. I don't want to spend too much time because we have only 40 minutes. So I will let them introduce themselves and then start by framing the issues from their own perspectives, because each one of them brings a very different perspective to the conversation. So a little introduction about yourselves, but then quickly veer on to what do you think is the most important issue as it comes to carbon. Start with Angelene.
Hello, good afternoon. My name is Angelene Huang. I come from New York. I launched the Alliance for Impact from the New York. But right now we have more than, in the last 2 years, we have about 200,000 members all over the world. And we're building the community from youth, adult and senior, and ecosystem that we promote the sustainability and climate action within our community. And so I think that right now the problems that we're trying to solve is how can to make all the community raise the awareness of the climate action. Thank you.
Awesome. Hi everyone, my name is Brennan Spellacy. I'm one of the co-founders and CEO of a company called Patch. At the highest level, Patch is a software business. We're headquartered in San Francisco to help with interacting with environmental markets. So what does that mean? At the highest level, we're a B2B marketplace for interacting with, today, voluntary carbon markets with the ambition of growing into compliance markets down the line. And the thing that we really tried to do with Patch, which is really kind of at the crux of this idea of scaling voluntary carbon markets, is really this idea of driving trust through transparency. So there's a huge amount of stratification within carbon markets. There's a lot of kind of this idea of not every ton being created equal is something that we very much believe in. Historically, carbon has been treated as a commodity. This idea of we're abstracting away the detail, we're extracting away the underlying assets that are related to this transactable digital record. And this has resulted in a bunch of misunderstandings when it comes to actually tackling specific net zero goals or net zero claims. And so for us, we really spend a huge amount of time quantifying, understanding the many different dimensions of every ton of carbon that's underlying, surfacing that, send buyers to then eventually drive a better understanding within the broader ecosystem. And unless we kind of get that core foundation right, it's going to be very, very difficult to go from several billions of dollars to hundreds of billions of dollars. You have to understand the underlying data backing a particular asset before you can commodify it.
Hello, good afternoon, everyone. I'm Spencer Meyer, the head of science at NCX, or the Natural Capital Exchange. We're a carbon market offset developer and platform, also for biodiversity and other forms of natural capital. Myself, I'm a forester and landscape ecologist by training, and spent my career so far in academia in the nonprofit sector. And joined NCX this year because I've been really excited about the scalable opportunity that working with small and large forest landowners in the US and elsewhere can provide to sequester and store more carbon as part of the climate solution. We're very excited about natural climate solutions broadly speaking. So far we've been developing carbon market opportunities for about 6,000 private landowners in the United States. We already have almost 6 million acres or 2.25 million hectares enrolled across 39 states. So this is an idea that scales really quickly, and we're beginning to pilot in other countries as well. We want to bring the same sort of technology-driven approach through remote sensing and satellite and AI technology to be able to measure and scale carbon opportunities very broadly, very quickly in this critical decade. We want to bring that same approach to other forms of natural capital, such as biodiversity, water quality, fire risk mitigation, et cetera. And glad to be here on the panel today with everyone. Thank you.
Good afternoon, everyone. I'm Francisco Benedito. I'm the CEO and co-founder of ClimateTrade Corp. We are a US corporation based in Miami. So we were the first marketplace worldwide using blockchain technology in 2018 in order to bring transparency and traceability to the carbon markets, awarded in 2018 by the UN for that, exactly. So basically today, we are present in 5 countries, working with major corporations, especially in Europe, bringing not only carbon credits to the table, also energy, Biodiversity, we just created the first protocol for biodiversity worldwide in Latin America. So working in different areas, also helping originators, and also including B2C in the equation, not only B2B, but also B2C. So we are growing now in different areas, bringing to that critical mass to the marketplace. And essentially, ClimateTrade, with the essence also of Climate Coin that we created in 2017, it comes also all that blockchain expertise in order to introduce technology in the equation, in order to bring more transparency, not only in the transactions where the money is flowing, but also in the certification and avoiding that double counting that today is not done yet because of the connection to the registers. That will be done at some point. Thank you.
Kia ora tātou, or greetings to you all in Māori, the indigenous language of New Zealand, where I'm from. I am the chief economist at the Environmental Defence Fund. I now live in New York. And the Environmental Defence Fund is a non-profit which is based on science and economics to do advocacy. And we particularly have a strong interest in really high credibility carbon markets that can operate at the scale that will make a real difference. The way we think about a carbon market or an international carbon credit market is that it's fundamentally a way to move resources towards those who are willing to act but can't do it alone. And so today I'd like to share with you our vision for carbon credit trades that are based on deep collaboration among small groups of countries, and carbon credits that are based on the level of the whole economy for integrity and credibility. And we call this approach Climate Action Team, or CAT. Thank you.
Thank you, Suzi. So we all know that there's carbon and there's carbon, right? So it's like money. Money can do a tremendous amount of good. It can also do a tremendous amount of evil. So carbon as a store of value, and as the market is developing now, we see a big divide there in terms of what is coming out of the transportation sector or in terms of industrial emissions, where you get mitigation, and that's also carbon. What's coming out of soil organic carbon, which could actually heal the planet, bring back our ecosystems, and that is also carbon. But one has limited value, equal scientific value perhaps, but in terms of environmental value, value in terms of nature-based solutions, this has tremendous potential, but it hasn't caught on. So why is that? I think, let's start with Suzi and then we'll go this way.
So I think it hasn't caught on because what a carbon market is not really about carbon, it's about reduced carbon. It's about carbon that's not in the atmosphere, and that's not something you can see or measure. And so it's very vulnerable to the sort of abuses that you're talking about with money, which also is sort of an imaginary thing, but that we all believe in. And so we haven't created the institutions to make carbon credits as real and as reliable as money is.
Francisco?
About regenerative ag that you were mentioning, this is carbon markets, as our colleague was saying, is not about carbon markets. It's about generating impact. What impact do you generate, positive or negative, or you don't generate any impact at all, right? Regenerative ag, as you were mentioning, is about introducing new methods in the way we do things. We have to capacitate the farmers in order to bring that positive impact at scale, right? So that's something we are working also there, and I think that is needed. And that's a mindset changing also in the way we cultivate, in the way we farm the things, and in the way to promote that in order to generate that carbon credits also.
I think your question really goes to an even higher level principle about all the essentially free benefits we've been receiving from nature broadly. Forests have been creating the clean air and the clean water that we as people need for, well, forever. And they've also been regulating the climate forever. And it's only been in the last few decades when it's become a real threat of losing those forests and losing those services that we've started to pay attention and started to put it in the economic sort of framework that we all live in on a daily basis in our companies and in our personal lives. And so I think it really comes down to the broad set of services. This is, again, not just about carbon, but about all the things we get from the agricultural lands and the soils and indeed the forests.
Thank you.
I think the comment you mentioned earlier about, why hasn't this really caught on? I think it's really at the end of the day that we really haven't, humanity as a whole hasn't really been put against a certain level of pressure at the end of the day. We're kind of entering this, the reason a lot of these, honestly, anyone here is even here is because of this secular trend that essentially young people, so basically the first two generations that are going to be materially affected by climate change, whether it's millennials or Gen Z, are beginning to actually vote with their dollars and vote at the ballot box. Right, we're having a tumultuous election day here back in the States, so we'll get the results later. You look back 10, 20 years ago, that kind of incentive wasn't actually in place. And so the whole point of carbon markets is to pay for some sort of positive environmental externality, right? The whole mechanism is intended to drive capital to something that helps the environment in one way or another, whether it's through biodiversity, global heating, or some other, whether it's water or something else. Historically, that was not a service people wanted to pay for. And now we're seeing a world where consumers who are actually pushing both corporates and as a result investors and the most lagging indicator, policymakers, to make this decision, and that's actually what's driving the underlying value. And the reason, I would actually assert that it is catching on. We're just in very early days because we're kind of just going through this catalytic moment.
Angelene.
Yeah, I think because the technology and also the pressure come from the government and then human nature, so that even this climate action has been last a long time, but due to all the technology, mechanism, carbon market, blockchain, they can actually start to pricing those intangible product like a carbon credit, right? So this help a lot of people in currently be able to access those market and be able to offset the carbon emission. So I think as we're going to talking later about blockchain, we are still in the early stage. More than 50% of those carbon system still in the proof of concept stage. So I think we just need time and patience and continue.
Thank you. I think everybody agrees here that we're at an early stage. That this biggest free lunch in the history of the planet has to stop. This private profits and public losses has to stop sooner rather than later. But we also need integrity. We also need certification. We also need to provide a degree of assurance to the buyer that it is indeed what it is being sold as, and that there is no leakage, that it is not being sold to 5 people at the same time. So I think blockchain and digital technology can play a huge role in that. So your thoughts on that? We'll start with Angelene.
Yeah. Okay, so blockchain technology definitely can bring the transparency. So I think that the current, the hurdle to prevent the carbon market to quickly spread is because the opaque ownerships not clear, and also the pricing is not clear. There's no any mechanism to how to pricing every carbon credit product. So I think the blockchain definitely bring the transparency, also the trustworthy, and also technology to helping this market quickly, faster, and cheaper. Why? Because it's because using if everyone here understands the blockchain, how can be successfully in the currency, and then the same technology can help carbon credit to be successful. So that every transaction, just for example, when a project submitted, then the credit claim, the carbon credit is submitted, then the system will verify the credit. And when they approve the transaction start, the blockchain will broadcast this transaction to all the peer network. And every node in this blockchain will receive the transaction. It's tractable. And then also will verify the both sides of the transaction. After the random node is selected, then the blockchain will publish the finalist. So in this example to definitely enhance the accounting ledger, so that will make the whole administration of the carbon market and trading more cheaper and more easy to management.
Thank you.
So, I'm going to be really interested to hear, these thoughts were great, and I'm going to be interested to hear what Francisco has to say, because this is kind of the world he operates within. Probably in the last year, I've kind of gone from being a kind of a whole to more of a bear, candidly, on blockchain. And the reason is actually related to the fact that it's just a technology that guarantees uniqueness that's accessible. And so the reason that there's actually a difficulty, if you think from first principles, with pricing and understanding the value of a particular unit of whether it's biodiversity or carbon, is not because it's not a technology problem. It's because people don't have the frameworks to actually understand the value of it. It's actually an economics problem. And so people don't understand how to price these externalities, and they don't have the data to price the externalities. And as a result, they can't figure out what it's worth. Kind of drawing an analog to equities, no one's concerned about the NASDAQ double sharing a position in a publicly traded stock, right? But you can still pull up your Bloomberg terminal and look at price to earnings, does it have a dividend, what's the market cap, because they have the frameworks to value businesses. And I would assert that we must actually hold off. I'm a programmer, I love software. I'm very, very excited about software. I'm pro-tech, I'm very much a techno-optimist, but that's actually not the unlock, right? If you actually have the best frameworks to understand and how to price the negative externalities, it doesn't matter if it's in a centralized relational database or on blockchain, you're still gonna have an equally good result. And so for me, I'd actually encourage us to take a moment, take a step back. Why don't we understand the value of these things? And then once you have that framework, then you can have the conversation about implementation. So are we gonna go centralized? Are we gonna do centralized? Are we gonna do something? How are you gonna guarantee interoperability? But just because you have the ability for people to bid on a piece of a particular token or credit doesn't mean they actually know what it's worth, because if they don't have the core data, it's actually purely speculative. And we've kind of seen that with the recent crypto drawdown in a lot of cases. A lot of the DAOs related to carbon credits have actually performed very poorly in the last 6 months.
Thank you. Spencer?
I think we're largely talking about the tracking and traceability of credits once they get generated, but I want to move back earlier in the supply chain part. And I think there's a lot of room for improvement in the integrity of the credit that gets created before it gets put on a blockchain or some other ledger or some other approach to tracking it through time. I absolutely agree we need transparency and traceability, particularly as the markets get more sophisticated and we get secondary market or more advanced secondary markets. But I think we need to leverage technology that's available today that was not available 10, 15, 20 years ago when carbon credits were really getting described the first time and developed. We have a lot of technology that should allow us to develop credits where we know the actual impact, where we know the results of, because we can measure them. I think we need our certification systems to evolve in the same way the technology to measure them has evolved, because sort of proof of process is really not good enough any longer. We need to actually see evidence. We need to be able to demonstrate how much climate benefit there has been from a carbon project or any biodiversity project or anything else. So I think we have to start earlier in the process, make sure the thing that we're creating at the very beginning has integrity and quality, and that we can measure the benefits of it. And then as we're tracking it through the markets and to the eventual retirer of that credit, we have that same level of transparency.
Thank you.
Yes, my colleagues were saying, basically blockchain is a technology, but it's a technology that if it's not connected to other technology that bring us the accurate data, it's not worth for anything, no? I mean, at the end, it's DLT, distributed ledger technologies, that we need to bring the data. It has to be accurate. If we put something that is fake on blockchain, we don't have anything good in blockchain, right? So we need other technologies. We need IoT, we need satellites, we need drones to bring data, we need to make samples with new technologies from regenerative ag, and that we put in a blockchain, and this is immutable. That's the beauty of blockchain, no? And then we connect these like different technologies like digital MRBs that can bring us all that data real time. Imagine we made a POC with solar, for example. We can generate carbon credits in real time because we have the data. I mean, you generate kilowatts hour, it's converted to CO2, and that's proven because you have the invoice from the utility company. So what else do you need, right? Do you need a PDD? No, you don't need it, you know? So at the end, blockchain is good because of that. You give real-time data, you get real-time carbon credits, you get real-time profit to the companies. You don't have to be paying in all the steps at the same time, no? So that's the beauty of blockchain and why it provides transparency. But at the end, it's better than a centralized device, because imagine that one registry publishes one record of 7 years ago, and one time that server deletes that data. You don't have it anymore. If you come to my platform, you have all that data in all the different servers worldwide forever, you know? So that's the thing, including all the other things. No?
Thank you. Suzi.
I think these conversations about carbon markets often get lost in the details. And the fundamental thing of any market is accountability. Who is responsible for what? You can't have a market unless you know that. And we don't know that in the carbon market. And the person who cares about the quality of the credit is not the buyer. They are buying it to meet a commitment that someone else is imposing on them, maybe government, maybe a voluntary market commitment. But the person who is ultimately affected is all of us and all of our families and all of our friends. And so civil society and government as our representatives have to determine the quality of those credits. And I think we need to keep our eyes on a crucial challenge here. So if we are going to be on track to meet the 1.5 degree target, then over the next decade, 3/4 of the emission reductions that we're going to need to do are going to be in developing countries. These are countries which have a lot of mitigation opportunities, but they don't have the finance and they don't have the capability to implement those opportunities on their own. And we want to use carbon markets to complement and supplement the money that can come through age channels and through MDBs. But to make that happen, it can't be done project by project by project. The transactions costs of that are completely outrageous. And it's just not good public policy. If we want a system to change and to transform, we need to be thinking about the system as a whole, not each of the individual components of it. So in terms of international carbon trading, it needs to be driven with governments at the centre. I know that that can be very frustrating in some instances, but governments are the sovereigns who actually can make these sorts of commitments, can turn these into legal agreements, and then the sorts of credits that these guys are talking about can happen within countries, but they are never going to drive change on the scale that we're talking about. So we need to be thinking about radical new models, what we call jurisdictional or entire sector, accelerating the rate of change in the energy sector, shifting the whole way that we think about the Amazon in Brazil so that it is protected on a broad scale. And that is where we will see the enduring change that ultimately will potentially save our planet and us.
Thank you, Suzi. I think that's a great segue into the pricing question, because it varies widely, anywhere between $10 to $40. And of course, in many of these segments, it's headed upwards, as we know. But how do you bring equity into the whole pricing question? Because as you rightly pointed out, the development costs of these carbon projects are exponential. And as we have seen in some cases, the poor farmer ends up getting only $4 for carbon that was sold for 22. And then, of course, there are better ones that possibly the farmer makes 50%. How do we get to a stage where the farmer makes 90% of these credits? Is that a pricing question, that if the prices rise, then the farmer can make more because of the exorbitant development costs? Start with Angelene. And very quickly, because we'll run out of time.
Sure.
So, yeah.
Yeah, so I think the pricing right now is also depend on the quality of the project and then who manages this project. So to improve this pricing, I think we should be building the systematic rules and regulation that definitely will need working with the local government, and we try to standardize, internationalize.
Thank you. That's what Suzi pointed out. Yeah, thank you. Brennan.
Yeah, so I mean, I think, so I'll comment on the equity piece specifically and kind of how funds are split. And so, I won't comment on the kind of what's the right blend, but I think it's really important to keep in mind that every value chain for any good or service actually has like layers of value built on top of it. So I used to work for the supply chain team at the company that I worked at before starting Patch, this company called Sonder. We were a digital hotel. And when we would procure furniture, instead of working with retailers, we'd actually go directly to Shenzhen in India to actually get the furniture. And you would realize that your kind of goods that are produced, or your West Elm couch, whatever it might be, you're actually buying it. The cost to West Elm is usually on the scale of like 20 to 30% of the actual purchase price. And there's kind of logistics and travel, and there's distribution and advertising, kind of builds up to this much more expensive thing. And so it's actually very normal, actually, for the producer of a particular good to sell that good to then have it be resold as a finished good to someone else. Distribution is expensive, education is expensive, building software, if you're using software to distribute, is expensive. And so I don't necessarily think that that's unequal, because if those farmers, for example, didn't have access to those networks, they might not sell anything. right? And so now, is it the right split 20 to 40 to 50? I can't comment on that. I think it's going to depend on the context, but it's pretty important to keep in mind that any good we buy, whether it's financial services or hard goods, actually have this layering and stacking of value, because the moment a good is produced is not immediately valuable. It needs to be sent over the world and distributed.
Spencer.
I think the price and the equity question are inextricably linked. I think that, for us at NCX, we work directly with private landowners in the US, and we run a reverse auction. So we actually ask the landowners to tell us what their price is for them to defer harvest. That's the particular methodology we use. So we ask them directly what is their price to change their behavior. And to us, that's a very strong signal, because these are people who own and manage land and are otherwise engaged in timber markets. So many of them have a very sophisticated understanding of what their actual opportunity cost is to sequester more carbon or not. And so, the price in that market is very telling for us. I think more broadly across the market, now that we have more ratings agencies and remote sensing ways of measuring how effective or not previous carbon projects have been, it's becoming more and more clear that the price has not reflected quality in the past, and that the price to really change behavior is probably significantly higher, maybe an order of magnitude, compared to a lot of the relatively low single-digit and low double-digit prices of forest carbon offsets on the market. So I think we should all expect, if we want to have real meaningful change in the world, those prices will have to go up over time. Now, we probably can't increase that price so much so quickly the net zero goals start getting pushed to the back and pushed aside. So there's some give and take that's going to have to happen in the market, but we need to make sure what we're paying for we're actually getting as a public society, like Suzi pointed out, because otherwise we are all going to be the ones that suffer. But back to the equity point, I think making sure as much money as possible is going directly to the people who own the assets that are able to sequester more carbon is critically important. That's true in the US, and that's probably even more true in other parts of the world, because the last thing we want is for the carbon market to become the next extractive natural resource industry. That would be a big lose for all of us.
Thank you. Francisco.
Yeah, basically, as we say in Spain, this is farm to the table, no? I mean, we have to bring directly the originators to the table in order to be able to put in front of the direct buyers, no? And obviously, as we created the marketplace initially, was in order to avoid that much speculation and that much brokers increasing prices. So the fair price has to go to the originator of the project, basically. So at the end, it's a fair price, so you can generate more projects and can scale it up, obviously, no? So what we propose, obviously, is like bringing that fair price to the projects, but we have to see the intangibles. As my colleague here was saying, is a lot of about the quality of the projects, but many other things that are affecting the projects, no? For me, let's say putting a price on a project that is conservating an area that it doesn't have to be conservating, and maybe it's a high quality forest, but doesn't have to be conservated, no? Does it generates impact? It generates any positive impact or not? That's intangibles that we have to take care, and that has to drive the price of the project, right?
Thank you. Suzi, last word.
So in current voluntary markets, credits are selling for less than $10. The best estimates of the value of carbon in the out of the atmosphere to all of us is about $185, and that's probably low. So that's a phenomenal gap. And we're not going to get people in a voluntary market to pay $185 because they have no incentive to do so. So at some point, we're going to have to move from voluntary through to compliance markets, where as a society, we are holding ourselves and our companies responsible for actually considering the full carbon value of our activities. In terms of getting that value down to the farmers or down to the people who are building small-scale microgrids, we can't do that just through projects. We have to go for much simpler systems where potentially they are receiving a simple subsidy. They've never heard of a carbon market. They don't need to know about a carbon market. We've just made it easier for them to do what they're going to do. And then the country or the jurisdiction takes responsibility for those gains and uses those to fund the ongoing subsidy and support to those communities. So we need to make it simpler, and we need to share a lot more of that value. We don't in other markets pay people what it costs to produce. We pay somewhere between what it costs to produce and what we are willing to pay. So we should be sharing that difference with the people who are making a difference. Thanks.
Thank you. Thank you so much to our distinguished panelists for a wonderful session. I'm sure the audience is taking away the importance of the interplay between equity and price and quality, and of course, the price matching our ambitions as a world community. If we want to see the changes that need to happen for us to fight runaway climate change, then we must be willing to pay what it takes to bring that change about. Thank you very much. Thank you.